Good afternoon, everyone. This is Lee Rose with the Financial Brand. We'd like to thank everyone for joining us today for this webinar from Alkami, titled Big Tech's Influence on Digital Banking. Before we begin, I just have two quick reminders. First, the recording of this webinar will be emailed to you shortly after we've concluded. And second, we will be doing a live Q&A toward the end of the hour, and our speakers would welcome any questions. Just type those right into the questions panel on your GoToWebinar dashboard. And now it's my pleasure to introduce Allison Cerra, Chief Marketing Officer at Alkami, and Jim Marous, co-publisher of the Financial Brand and owner of the Digital Banking Report. Jim, do you want to get things started?
Sure. Allison, welcome again. We've worked together before, and it's interesting because while I know that everything we have talked about in past conversations is still valid, the marketplace continues to change so quickly. I mean, I don't think there's ever been a time that being in banking has been more exciting, more challenging, and in certain ways more threatening. To start us off, we're talking today about a study that you did around the future of banking. Can you talk just a little bit about the structure of the survey and what the survey actually entailed?
Yeah, sure. So Jim, first, thanks for having me. I always love talking to you. And you couldn't be more right. I say if you don't like where things are, stick around for another 5 minutes. They're sure to change. But yeah, so last June, Alkami commissioned a study where we went to 795 digital banking consumers across all walks of life. So we have representation from Gen Z to boomers in this study, and we have representation across all FI types in this study, from megabanks to neobanks to regional and community financial institutions, asking them about their banking preferences and what they see to be the future of banking. We complemented that study with a study in parallel to 150 digital banking decision makers at regional and community financial institutions to try to understand where the perceptions might be aligned versus different.
And so, the survey, the report, I should say, it's interesting because the first section says banking as usual is not going to be good enough. And there's nothing more apropos than that. And really, and the title of this session, the Big Tech's Influence on Digital Banking, really says it all. While we talk about the consumer really changing, and we really talk about the competition really changing, the reality is banking's playing a game of catch up here. So you go into quite a bit of detail in the survey and the report around the bank of the future. What does that look like from your perspective, from a broad perspective? We'll drill down, but
yeah,
what does the bank of the future really have to look like to succeed?
Well, I'll give you one of the more interesting questions and answers, and then we can drill in. We asked consumers, which of these two statements do you agree with more? The bank of the future will be a financial services company, or the bank of the future will be a technology company. And we had nearly 40% of consumers who said the bank of the future will be a technology company. Interestingly, the regional and community financial institution leaders that I talked about, that we also asked that same question of, over 50% of them agreed the bank of the future will be a technology company. So I think that's kind of one of the headlines of the study, that this world definitely is being influenced by tech. If not, technology will actually start to take the lead here as being the dominant force in the way we think about financial services in the future.
It's so interesting because we did a survey also of bankers and globally and asked, how things are going to change, and the dramatic nature of things around personalization, as you said, around what's going to be the success factor. What are they going to look like? It's going to look more like a tech company. The fact that branches are going to close, but they're not going to go away. We don't think that.
Right.
But when you look at all the dynamics, it's so much different than it is today. However, while there's the knowledge of what needs to happen, and while consumers are telling us more and more what needs to happen, do you see that there's still a slowness, maybe as much caused by the success that financial services firms are having financially? It's really hard to change when things seem to be going so well, isn't it?
It is hard to change. I will tell you, just speaking from an Alkami perspective, we serve over 150 really remarkable financial institutions across the US, and we provide their digital banking software to them. I will tell you from our interactions with our clients, they understand and they are the pioneers and the progressive leaders on leveraging technology to change the user relationship and the user experience. I don't think it's as much a will to change that we see as much as it is changing your infrastructure is really difficult. And a lot of times, and you've said this, Jim, very well, it's as much your back office complexity that has been inherited through decades of working through processes, often manual, if not cobbling together a lot of disparate systems, that is often an inhibitor to how fast that transformation can occur for the financial institution, let alone the front of office kind of digital banking experience that must also be modernized. So I think there's a will. I think sometimes that will can be constrained by just the reality of the tech stack and the reality of the processes over time and how fast they can transform.
It's interesting also because sometimes we're seeing that organizations may not even have a good vision of what the goal has to be. Everybody knows they've got to become a digital bank, but the definition of what digital and banking is really differs from organization to organization. We talk about the new account opening process and onboarding process, that a 15-minute ability to do a digital account opening is not digital banking. That is
Right.
doing banking digitally. And the reality is the consumer that can open an Apple credit card in less than 3 minutes, or the person that can open a Discover card in the same amount of time, or open a Chime account, or a current account, or a Varo account in a really limited amount of time using the same regulations, shows us that sometimes it's like a GPS system. If you don't tell it where you want to go, it's going to be really hard to get there, isn't it?
Yeah, and I think you're hitting on something. It's about start to think about the philosophy and the guiding principles of how you need to think about these new consumer experiences. What we found in the study is that big tech is influencing that, whether we care to acknowledge it or not. So consumers are increasingly expecting real time, intuitive, seamless, evolving experiences that understand them and know them. And that's a really high bar to go hit. And what we have to realize is that FIs are no longer just competing against themselves, and to your point, not even necessarily just against Apple, which would already be a formidable competitor. They're competing against Netflix. They're competing against Facebook. They're competing against TikTok. They're competing against all these other companies that are acculturating consumers to a new set of expectations as to what they expect when they engage digitally. And that's where the eye on the ball has to keep being forward leaning and the bar just keeps raising ever higher, not even necessarily by direct entrance in the fintech space or those aspiring to offer financial services, but anyone who's changing the dynamic of how a consumer wants to interact digitally with any company.
Well, it's interesting because you mentioned all these other types of firms, and those are the exact firms that consumers really doubled down on during the pandemic. I mean, I had DirecTV. We moved to Netflix and Hulu over the last 2 years, and you talk about the way people engaged on Amazon and on Facebook and Zoom and all these other things. People became aware of what was possible. One thing your survey also looked into was the differences in demographic segments. What did you find as far as what people expected based on their demographic groups?
This was one of the more interesting findings of the study because what we found is that a great experience is age agnostic. It is generation agnostic. One of the things that I think we tend to have as just as we talk around the table is a generational bias. We think, okay, if you're a boomer, you don't want the same fun, engaging, personalized, highly evolving experience as, say, a Gen Z does. And what the study did is it kind of broke that paradigm because we actually asked, again, from boomers to Gen Zs, what do they expect out of a digital banking experience? And we gave them a set of polarities to say, kind of think of them on a scale. Would you rather have something that's simple and functional to use or something that's fun and engaging? Something that helps you do things for yourself or something that automatically does things for you? We had about a half dozen of these where you could think on a sliding scale. And what we do in the studies, we show you the map of the data points of how Gen Z versus millennials versus Xers versus boomers. Where are each of those circles on each of those half a dozen scales? And what you look for is to what degree of separation are between the circles. And what you find is that the degree of separation isn't that great. And in some cases, the boomers are actually out in front wanting a more engaging, evolving experience than even the younger generations. So I think what we learned from this is, look, don't interrogate generational biases here. We're not saying there aren't differences among generations generations. We all have a worldview based on when we came of age. But this idea that great design somehow a generation has a generation gap to it, we didn't find that in this study.
What's interesting too is it really depends on where they are in their financial life, because I think as people get into more complex products, they go into a little bit of a curve saying, I want to go to my branch maybe a little bit more, and then it may trail off again as they get more familiar with that. But in the same sense, it really depends on how they engage overall. I know you can take any person. This is where personalization really comes in. You can take any person, and the way they engage digitally differs from person to person. And as you said, it's becoming blurrier and blurrier as far as age categories. It's more dependent on how does a person overall engage digitally. And when we're talking about engagement, we talk about it quite a bit. We're moving from a transactional phase of banking to an engagement phase. Do we see it to be more and more important to build some type of tactile nature or engagement qualifications from a consumer to be able to have them be qualified as a primary financial institution? In other words, does it really matter where I write my checks if I'm not engaged any more than that?
It's such a great question because the very definition of what a PFI is under assault right now, right? And being redefined in this whole world that we find ourselves. We know that consumers are not monogamous and we can't expect them to be. There are too many options for them now. And, I think I saw something that, the average consumer has dozens of financial relationships now by the time you look across all the different categories that they could consume. But the notion here is, how do you become the, as we used to say in tech, how do you become that single point into those different applications? How do you become that single pane of glass? How do you create a delightful, seamless experience that seems to intuitively know what the consumer wants without creeping consumers out or otherwise violating them and their privacy? And that is where the new PFI can kind of emerge. There was a study done several years ago by a company called the RFI Group, and excuse the time frame because it was like from 2016, and immediately people go, gosh, that's old. But let me tell you why it's notable. They went to 40,000 consumers across the globe, including a cohort statistically in the US. And what they found in the study is that there is a direct linear correlation to how heavily engaged, to your point, a consumer is with a mobile banking or online banking platform and how many products they have with that PFI. And what they found is that not all engagement is created equal. It's not just how often you go in, it's through which conduit you go in. Mobile banking is really where you see the highest correlation between the number of products with the PFI versus how often they go into the mobile banking platform. So if that now becomes essentially your main branch to that consumer, now becomes the mobile device in his or her hand, how do you create an engaging, intuitive experience to allow them to want to transact more with you?
Well, it's interesting is we've seen that PayPal has made it very clear they want to build a platform. They want to be able to be engaged with you on an ongoing basis. They got into crypto so people would go to their app more frequently. They're doing other things so that you engage with their app more frequently. But really what it gets down to is the application of data and insights to actually help me live my financial life better, doesn't it?
It truly does. And if there was something we saw in the study, we can talk all day, you and I, about these personalized experiences, intuitive experience, data-driven experiences. And yes, consumers say, check, 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 I'll take all of the above. But when you start to ask consumers, to what degree do you want adult supervision in the room? In other words, do you want to let the machines in AI world make these decisions for you? Or do you want some kind of human machine teaming with human oversight to make sure those machines don't go awry in the process with algorithms that could be biased or otherwise malfunctional?
Yeah.
You definitely see consumers in this same study, anywhere from 60 to 75% of them, higher for boomers in this case, say, I want adult supervision in the room. So consumers understand enough to know that really financial services is still too important to leave completely to autonomous machines. We need financial service human beings behind the scenes, making sure that we're doing things judiciously, ethically, and responsibly. And this is where FIs really can start to separate themselves potentially from other very tech-oriented companies that don't have that human expertise to bring to the equation.
As you know, I've used it before, and I've used it in this conversation, the whole GPS of financial services. You want the GPS system to tell you where you should go, how to avoid the detours that can get you in trouble, how to get to the destination quicker using the intelligence put in the system. However, you have to still be aware. You can't let it all go. And so I think that what you really are looking at is, how do I build a personalization aspect that uses data and analytics to build a higher level of engagement where I'm going to be interacting with my financial institution in a new way. You know, Ron Shevlin just brought up the fact that in research they just did, a majority of consumers today, a very high number, not a majority, but a very high number, are now considering the fintech firms, the Chimes, the Marous, the Currents, the PayPals, to be the primary financial institution. You know, if any institution needed a wake-up call, it's that message that says, by the way, you may still have current accounts with you. That
Right.
doesn't necessarily mean you have the relationship. And this is where, yes, you need the technology. We talked about the back office technology, but you need the intelligence to drive forward. How does Alkami help financial institutions build a better perspective on what each individual customer looks like and what to do next?
I saw the same report. I think he calls it silent attrition, which is so true. It
Yeah.
would almost be easier if they came in and tried to close their account with you, because then at least you could try to save them, right? Those days are gone. They just essentially park a paycheck with you before they move their money where they really want it to go. And something that we do is we basically help our FIs go to market stronger and smarter. And we do that with a lot of data behind the scenes, as you might imagine, but also giving them the tools within the digital banking platform to serve up a targeted offer to a targeted cohort of users at the right time. Because users have made it very clear in this study, it's not that they don't want offers, they don't want irrelevant offers. So how do you increase relevance? How do you make sure it's more personalized? How do you make sure you're leveraging the data at your disposal to actually make decisions or help consumers make decisions that empower them and don't exploit them in the process? The other thing we do, I'll tell you briefly, is we also give our FIs kind of dashboards of what does good look like. When we talk about mobile engagement, what should your 90-day active mobile engagement rate be? And how do you look versus your peers? And are you going the right way? Are you going the wrong way? If it's not going the right way, how do we help you drive more engagement? Because again, we know that the mobile device is now the branch. So how do we drive more engagement through that branch to drive greater householding? So it's a partnership for sure, right? We have to work with our FIs and really put our heads together, but we do rely on data, and we rely on a user experience that's frictionless and seamless and integrated to help drive engagement in the right way.
So when you're engaging with a financial institution, it is not a core, it is getting involved in the core conversion, but it's not something you have to do either an on or off switch, correct? Am I correct in assuming that you can engage with an institution and have them scale up based on where they are today and where they need to go at a pace and at a scale that they can not only afford, but they can really absorb internally?
Absolutely. I mean, we offer a very fully functioning, robust digital banking platform, and that is, as we say, that's the chassis of the vehicle. So when you come to a company like Alchemy, you're getting that fully functioning chassis. But then we offer a whole host of products and capabilities that, depending again to your point, Jim, do you want to offer crypto? Is crypto something that your FI is interested in? Is it something that you feel comfortable with? We obviously have a lot of data to support why it might be a good decision, but that is an on off, right? We have a lot of these capabilities that you can toggle on or choose not to adopt. But what we take seriously is benchmarking you. So if you choose not to, we're also the first to give you third-party benchmark data to say, okay, you don't have that feature enabled. How many megabanks and neobanks and other larger financial institutions do have that feature enabled? Doesn't necessarily mean they offer a great user experience. We're not conflating the two, but you also have to have enough flavors of ice cream in the assortment to be able to create a
Yeah.
really good sundae too. So if you don't even have that flavor ice cream, we will respectfully show data to say, look, should you? And if we think you should, here's the business case to help you make that decision.
You know, it's interesting. Anybody who listens to me on my podcast or in other webinars we've done, I keep on referencing the fact that now more than ever, financial institutions really have to partner with third parties that have gone down these paths before, because you need to know where the shortcuts are. You need to know the secrets of success. And in many cases, You need early wins to be able to justify future investments. As you engage with a financial institution, how do you help them get those early wins? How do you engage with a financial institution early in the relationship to be able to see that they can succeed, but also don't get off path?
So when we have a relationship with our FIs, we are talking, these are 5 to 10 year relationships. This is non-trivial to rip out and replace a digital banking provider. And let's face it, this is a brownfield market. Everybody's got one of these, whether it's a homebrewed solution or they're already using a provider. So this is a pretty significant decision for any FI that they take seriously and we take seriously with them. So really it's about understanding what are your goals when you think about why you're looking to transform and why you're looking to adopt digital banking. Some FIs are looking for the digital banking platform to be the catalyst to their broader FI transformation. They see it literally as the hub in their tech stack of, okay, if I get a better digital banking platform, it's not just going to serve my users better, but it's going to actually help me operationalize the back office a lot better because it's now going to become the hub of my tech stack. Others are looking at, look, I just need to drive engagement. I need greater householding. I'm trying to grow. I'm trying to grow organically because M&A is obviously hot, but that might not be a path for everyone. So some are looking for growth. Even others are looking for, look, I'm looking to defray operational costs. I have an infrastructure that is cost inefficient compared to neobanks that don't have a lot of legacy infrastructure or branch locations. So I need to have more self-service. So really for us, it's not a one size fits all. It's every FI is on a journey. We seek to understand what journey they're on, where they are in that journey, what they aspire for the final destination to be, and what outcomes that we can help them deliver with the digital banking solutions that we offer.
One thing I know from working with you in the past is that one thing that's really great is you're a third-party provider that also knows all the other third-party providers. So it doesn't matter what core system you use. It doesn't matter what other partners you may use. You've worked with all these companies before, and that's what's so great about working with third-party providers right now is they all kind of got to know each other, certainly before the pandemic, but everybody had to double down when the pandemic hit because everybody was forced into a situation that said, the organization says, I don't want to change everything,
Right.
but how can I change what I need to do? And one aspect that we've talked about before is the importance of speed. You
Yes.
talk about this being a long-term relationship, but can organizations get stuck in the whole process of taking too long to make a decision and thereby losing the benefit of timing? Is it important for organizations not to have a paralysis of analysis?
100%. I think what's even more important is kind of what we talked about earlier, the guiding principles of what consumers expect with something that's real time, intuitive, seamless, right? So you have to think guiding principles on user experience. You also have to have guiding principles for whatever your architecture stack needs to provide for digital banking, i.e., it needs to be open because innovation is a team sport. And if you're not leveraging the power of this ecosystem to welcome innovation from wherever the source, you're going to be falling behind. It needs to allow real-time updates because consumers are going to expect real-time updates. It needs to offer seamless integrations. It needs to offer a user experience that delivers, a best-in-class that rivals not just your competitors, but is keeping pace with what other tech categories are doing. So I think for an FI, it's really important to think about when I think about a modernized tech stack, cloud-based. I mean, I could keep going. There's probably 5 or 6 of these that would be kind of a check mark for you. Does your digital banking platform deliver on those things for you to allow you to continuously innovate, to allow you to welcome innovation from wherever it originates, to allow you to be real time, to give you the testing on what the user experience is at any given moment and show you how it can be evolved and improved? And if it doesn't, then I will tell you digital banking is too important to be left to just being good enough. You really need to find someone that can rival and give you that best in class experience because your FI is going to need that best in class experience to compete against these others.
One thing that we've seen in the research we've done is there's a big difference between digitizing what we've done in the past and being future ready technology and data wise and analysis wise for the future. How do you help organizations not just try to fix what the past did, but really be prepared for what's on the horizon?
It's such a great question. It's so hard. We're changing the tire going 75 miles an hour. I mean, this is
Great
non-trivial.
analogy.
Yeah, right.
Exactly.
It's non-trivial, and it's not an academic exercise. This really is roll up the sleeves and figure out what parts of the engine we can change, or the tire, even as we're blaring down the highway at increasing velocity. But I will tell you, we are a very one thing we do as just something that's just part of our religion here is we're very focused on end users. This study is just one example. We believe that we have to keep our eye on end users. They are dictating what they expect, and you have to be able to keep up. We also keep our eye on not just what tech companies in this space are doing, but what are tech companies at large doing? And how can we learn from that so that we can make the financial experience that's offered over its digital banking platform the best it can be, not just against what's available today, but what's available in other categories today that are increasingly raising that bar. We do testing regularly that we offer up to our FIs to learn. I mean, anytime we make a change to the user experience, that's a pretty important decision for us. And we make changes over time, and you would expect us to, because users are continuing to raise their bar. But we do things like we use the system usability scale, or the SUS scale, which has been around for decades. And it's really kind of a quick 10-point question answer as you're testing the user experience to make sure that what you're doing is highly performant, highly intuitive, highly seamless, understandable. And if it doesn't meet a certain threshold, SUS has been equated to the NPS of UX. Think of it as an NPS score for UX. If it does not meet that bar for us, we don't introduce that feature. It's pretty simple. It's like it's a bar we must meet, because our aspiration is to deliver not just a great experience, a best in class experience, one that gets people so excited that consumers become promoters for their FI and tell their friends to say, you got to try this FI because this user experience really is just that good.
You know, it's interesting. We always focus on that endpoint. You know, how good does that thing feel when I look at it on my mobile phone? But the reality is, to make the front facing part work, you've referenced it before, you need to make sure the back office works.
Right.
How are organizations that you're working with doing that? Because as I referenced earlier, you don't really necessarily want to digitize old processes because it'll still be as slow. Just it won't be as slow, but it's going to still be
That's right.
slow. And recently, I've had some interviews with some very large traditional financial institutions that said, we had to start from scratch. We had to start from a blank sheet of paper, because if we got focused on trying to fix what we had done in the past, we get bogged down in the past. How do you work with financial institutions to do that?
Before I came to just a sidewinder on that. Before I came to Alkami, I was at HPE, right? So we do cloud-based infrastructure at HPE, and one of the things we used to tell our customers is, anybody can say that tomorrow an enterprise is cloud-based. You can just lift and shift workloads that are on-prem to
Oh,
the
yeah.
cloud and say I'm cloud-based, but you have done nothing to modernize, transform, or otherwise move your organization forward if the workloads were the wrong workloads in the first place, and the process behind the workloads are the wrong processes. So it's kind of the same analogy. You can do this in a perfunctory check the box way, and say that you have something like this or a capability, but if you've not taken the time to really use this as a catalyst for broader transformation, to your point, look at it as you would if it were a greenfield, and try to understand, if I had a blank page, how would I design this and what would the mousetrap look like? At least freeing the thinking. It doesn't mean it can all be realistic. Like I said, we're changing the tire going 75 miles an hour down the highway. But what we can do then is start to understand, how can this basic decision, which is a huge decision for many FIs, how do we use this to give it even multiplicative effects beyond just digital banking? Where else can we use it to help transform the way you operate, the way you engage, the way that you modernize not just your company or your FI, but also, change your culture, right? And we can talk about the great resignation and how hard it is to find talent. How do you basically do more with less, or how do you basically innovate so that your talent actually wants to come and work for you because they see you as a forward-leaning organization? You can start to see the trickle effects of the dominoes that can, cascade from making one decision, and that is choosing the right digital banking partner.
You know, it's interesting. You touched on so many issues just then. One of them was about the people issue.
Yeah.
You know, the beauty of data and analytics done well is not making a really great report. It's really find a way to distribute the insights across the whole organization so that innovation goes faster, so that interaction goes better between, let's say, a brand staffed employee and the consumer. But even more importantly, it makes current employees feel like they're a part of the digital banking transformation process, which is very important. And as you said, if you look to hire even more skilled employees, they don't want to work for an organization that simply is automating bad processes. They want to work for those organizations that are truly thinking in a digital manner. With that in mind, and when you look at the back office transformation we talked about, how important is it to find a way to distribute and empower employees across the organization to use data and analytics for faster innovation and for better interaction?
We have some FIs, Jim, that come with us really as one of the key motives is I need to transform my culture. And we're seeing more FIs bring in talent from big tech that you're starting to see be put in the C-suite that have big tech resumes and big tech backgrounds because they're looking to imbue the organization with that line of thinking. And it's a cultural transformation. And again, they're seeing this as a catalyst to help them transform outdated processes or to help them engage with employees and the data and ultimately their members or customers in a more effective and efficient way. So we're definitely seeing so much broader again than digital banking. I know I sound like a typical CMO where I make it bigger than it is, but it really is. This is a big decision. It has a lot of weight, but it's also a profound decision that can impact so many areas of the FI beyond what is already a pretty important one, which is the digital banking experience itself.
It's interesting. We talk about all these things that have to happen, and you reference culture, and we've talked about this before. But when you're looking at culture, culture starts to the top.
Right.
How challenging is it for your organization? I'm not going to have you name any names, but when you're starting to engage with an organization, is it something that you feel really quickly, whether or not truly there's a benefit and there's a support of very top management to actually change? Or are they simply going through the motions, hoping to check off the box? I mean, do you see it both ways sometimes?
Sometimes we do, but I will tell you that the clients with whom we engage and the prospects with whom we engage already have the ideology that they want to change. So we see, again, not everybody wakes up every day and says, boy, I really want to get a new digital banking platform because that seems like a really fun project. Most people are like, look, it's like we're opening up the patient and we're doing open heart surgery. It's non-trivial. So by the time you realize, look, but I've got a patient that's sluggish or a patient that's lethargic, they're going to have a much better life. They're going to have better quality of life. All of a sudden, it's like the people we talk to in the FIs get that. And they're like, look, we need to change because it's going to give us a better future than what we currently have on this trajectory. But you're absolutely right. The culture that we see has to start from the top. And we have to see kind of like for this to really take root, it's kind of like a culture is a garden, right? You can't impose it. You can only put it in the right soil and give it the right nutrients and give it the right water every day. It's really up to the employees then, and basically, showing and representing the values that you want in your culture, measuring and demonstrating those values over time, that's when you see a culture really take deep roots in the organization. And, Alkami is very, very proud of our culture, and we like to partner with FIs that have that same kind of bold view of the world and want to go change the world because those are the ones we tend to partner with.
So when you talk about partners and you talk about the organizations you like to work with, is there a size parameter to be able to do this? Is there a size below which you say, you just can't invest, or is there a size above which you go, geez, you know what, we're probably not the best partner? Who is your best partner from a financial institution basis?
So we tend to say, look, there's about 10,000 FIs, give or take, in the U.S. There's about 2,000 of them that we really say are in the sweet spot for Alkami, and those are the FIs that tend to be the more acquisitive FIs. They want to grow. They have, a vision for their future. There's about a couple of thousand of them, and they range in asset size from 100 million. We can go way up, well above 50 billion. I mean, it's not as much about assets for us as much as it is about the members or the customers and the experience that those FIs want to deliver to their customers or their members. And short of that, if an FI has the same bold vision of I want to go grow organically or inorganically, or I want to transform and I want to be a leader in my space because I have a right to compete and my local or regional economy depends on FIs like me, then we're very happy to have those conversations.
So it's not about assets as much as attitude.
It's
I mean,
exactly. Yeah, I would say
it's
that's right.
yeah, it's interesting because I use the example of the PPP loans, and boy, that's a long time ago now. But the first organizations to do really well with the PPP loans were those small organizations that had done so well at becoming digital organizations before the pandemic.
Right.
Those organizations that did the worst, in many cases, were what I call the mid-regionals that really had been almost laggards. They were thinking that, geez, we can't invest as big as the big guys. And so maybe they stood still as opposed to doing things differently. What we're seeing in our research, when you look at digital banking transformation, the smallest organizations and the biggest organizations do the best, but it's not defined totally that way because, as you said, there's some in each asset category. And I think that's important because all the organizations that I talk to say, I want to work with the size, as you said, size doesn't matter. What does matter is, are you willing to do things differently? Because if you're not, then we're going to beat our heads against the wall. We're not going to really transform your organization because we can't just throw tech against it.
That's right.
Is that pretty fair?
And I think that's fair, Jim. And honestly, it wouldn't be prudent for them to invest if they're not seeing this as a bigger opportunity for them to monetize this in multiple other ways, right? So whether that's increasing on householding, return on assets, return on equity, driving loan growth. I mean, whatever the parameters are, modernizing their infrastructure, there's got to be something that we can both align on philosophically to say that's a problem worth solving. That's a problem that is worth solving, and that with the two of us working together, with Alkami and the FI in that case working together, we believe we have permission and the skills to go solve it.
One major takeaway from your study was that, if we asked 3 years ago, what organizations do people want to work with? They may say they wouldn't mind working with a PayPal, an Amazon, an Apple, a Chime, a Borrow. They may have mentioned that, but it wouldn't necessarily be their primary financial institution. And that's probably more as much as anything else based on trust. The trust wasn't there.
Right.
We're 3 years into this pandemic thing, and we're 5 or 6 years into some of these major tech companies really making headway in the financial service arena. And trust is no longer the big differentiator between a legacy and a fintech organization or a big tech organization. When you talk to financial institutions in your study, what did they aspire to be and who did they see as the biggest competition?
This was interesting because I told you that over 50% of those financial decision makers, digital banking decision makers, agreed that the bank of the future is going to be a tech company. But when we asked them, who is your competition today? They are far more likely to say it's the local or regional like bank or credit union down the street. That's who they still see. And while we appreciate and respect that, because that has been the recent history when account turnover happens, it's I go from one mega bank to another mega bank, or I go from one regional community financial institution to another. That has historically been the switching pattern. What we're seeing is that those rules are being eroded by consumers who are redefining them every day. Not only are they no longer switching necessarily, to Ron Shevlin's point, as much as just atrophying and silently attriting, but they're also much more likely to entertain, look, that fintech that maybe 3 years ago I thought, would I ever do my banking online? Would I ever really trust somebody without branches? If COVID has done nothing for us, it has taught us I don't need to go to a branch every day. So COVID has, if nothing else, accelerated what might have taken 10 years to get to into 2 years, because people realize I can now actually really bank without having to visit a branch, which makes these neobanks more realistic alternatives than maybe they were even 2 years ago. Not to mention, to your point, Jim, trust is a funny thing. And, while they may not realize that these neobanks don't have a bank charter in their own right, The reality is it's FDIC insured. There's a bank behind it. And oh, by the way, I just saw this great, Super Bowl campaign and TV commercial. There's a lot to be said. Consumers are very heavily influenced. We all are. I put myself in this boat. When you see a great TV campaign and you see it over and over on television and digital and all of these other outlets, you start to go, well, that must be a reputable company because I see them a lot.
It's interesting. We get concerned about the fintechs and all those, but I don't think any organization, very few organizations, have really done research into the fact that when the government started to do the distribution of funding for consumers, during the beginning of the pandemic, we all got larger savings accounts. In fact,
Yeah.
right now we're realizing people are traveling more than ever because they're starting to use those savings accounts a little bit. But
Right.
very few organizations said, yeah, we got all this funds. Where did money go out of those accounts really quickly? Did they go to a Robinhood? Did they go to an Acorns? Did they go someplace else? And I don't think many organizations really understand how much of that relationship they've lost,
hmm
and they're not as secure. And I think, again, getting back to the importance of this whole conversion process, this digital banking transformation process, we can't go fast enough, because the reality is the speed of yesterday simply is going to keep you in the same place relative to where the world's going. And it's never been going faster. When you look at what organizations have to do first, because everything's if everything's a priority, nothing's a priority.
Right.
What are the action items that financial institutions should do first today to stay in front of what I'll call the curve right now, the digital transformation curve? Where should they put their efforts and their mindset?
Well, that's a big question, right? Because, like I said, it's going to depend to an extent on everyone's journey. But I'll give you just a quick answer and let's debate it. I think probably the most important thing that a financial institution can do in this day and time is have real intellectual honesty with itself as to where it is in this race. And whether that means surveying their consumers, their businesses that do business with them every day, whether that means understanding where they are in the partner ecosystem, and do they have a platform that allows them to easily engage with a lot of partners in a fintech ecosystem that shows no signs of slowing down, whether that means looking at their back office, interrogating it and saying, where do we have highly manual processes that, to your point, might be taking us days to approve, as an example, a small business loan instead of minutes to basically get that. You start looking at things like that. I mean, you look at even small business. I know we're talking retail here, but like even small business is all but being ceded to fintechs who, candidly, Jim, don't have the best rates for these small businesses, but they just have a much better experience, and they have a much better decisioning process and a much better application experience. And these small businesses that don't have a ton of credit history and don't have a lot of data to rest on are finding these alternatives and fintechs to go, you know what, I guess I'll go with you even though your rates aren't great. Imagine if we could just solve the problem of how do we streamline processes so that we can automate, to a certain extent, the application and the decisioning process, so that we can start to extend credit across a much wider spectrum of consumers and small businesses, and really start to create a flywheel effect for the local economies that depend on small businesses as the engine of growth for them, right? So you just start to look at this, and I know that's a long-winded way to say, look, you have to have intellectual honesty with yourself. You have to look at a lot of data points, have somebody come in or multiple parties come in and talk to you about where they see the world, and get on the scale and see where you measure up today, and then determine, okay, where do I want to be in the future? And now you can start to have a thoughtful prescription around, how do I methodically get to the place I need to be in the future? But if I don't know where I am right now, really hard to know how to get to where I want to go.
You brought it up to be able to partner and just say, have somebody come in and give you the honest assessment, because sometimes you can't see the forest through the trees.
Right.
And again, most financial institutions just released their first quarter results. They certainly just had their analyst reports over what happened in 2021. The reality is, it's all good news. And
Right.
and sometimes you get blinded by the beauty of how well you've done without knowing, guys, you're on the ropes. You may not know it. Is this where an organization could call you and have you come in and go, you know what, here's where we are, and you can ask them the questions that are going to be hard to answer, and in fact, not just take the answer they give you, because you've heard these answers before, but dig down to the next level and go, okay, You say you've done a digital account opening. Let me ask you a couple follow-up questions to see
Right.
if we're seeing things on the same path. Because again, the advantage of a third party like yourselves at Alkami is that you've seen the success stories, you've seen the failures, you've seen why companies succeeded, you've seen why companies fail, you've seen where they should apply their resources right now or in the future. You know, most organizations would say, give me a quick win because I need more funding to go forward. Is this a viable option for a financial institution to say, you know what, I can't make a commitment right now, but I need you to come in and assess where I am? They're not going to lose from that discussion, are they?
They won't lose from the discussion. And what I'll tell you is, while we will never profess to know more about that FI, certainly in a discovery conversation, than they know about themselves, what can be helpful is simply calibrating on some data points of where we see the market, where they see the market, what our research shows, what their research shows. So there's never any harm in having a fulsome conversation
Yeah.
about where we each have the perspectives. And then if we see that there's maybe some congruence there or some alignment where, hey, we both see similar things, we both have a similar worldview, now you can start to engage us or others to say, okay, what can you do to help me solve the problem? But we welcome those conversations. And Jim, it makes us better, candidly, because we don't profess to be perfect on every level. So if there are things that we could be doing better, it allows us to have those intellectually honest conversations with prospects and clients to say, okay, where can we do better in service to the goals that we mutually have?
You know, I think the biggest benefit you have is you work with so many financial institutions. You've seen what's worked, what hasn't worked. You know, GPS is only valuable based on all the others in the community that keep on inputting data on how long it took them to get from point A to point B. This is the same thing we're talking about here. If an organization is only working with their own data set, they don't see a vision in the marketplace that a third party provider like Alkami has. And that by itself is worth engagement. You know, is there anything your research is really good. Before I forget, how do people get a hold of this report, or does it come with the recording of this webinar?
Great question. It comes with a recording. So we will be following up to the attendees so that they can look at the white paper. And I certainly welcome questions. We are always doing research. In fact, we're fielding more research right now. As we get questions from our client community or even prospects, I am always like a sponge trying to figure out, okay, can we put that in the next report? So please, I hope they download it and give us the intellectually honest feedback as to what worked, what didn't work, and where they think we could answer some deeper questions.
Great. So Lee, I'm sure we have some questions from the people that participated today. Could you share some of those with us?
Absolutely, and you do have quite a few. The first, Allison, we know Alkami did a large UX research survey this year on big tech's influence in this space. Were there any insights that you found surprising?
I think that probably one of the more surprising things that we found is to what extent big tech really has just completely blurred the lines between what a consumer expects from a digital banking experience versus maybe from their favorite entertainment or shopping experience that they enjoy on a daily basis. While we expected there to be influence there, when you see the graphs that I described of kind of these spheres of how people answered these questions for their favorite non-banking app and their favorite, their digital banking app and what they expected, the margin of error of some of those gaps was virtually non-existent in some cases. And I think that was probably, we knew there was influence, we didn't know to just how profound it was. And the data definitely shows it's in my opinion, more profound than I would have expected.
I think what's interesting too, Allison, is that people are continually evolving. You know,
Yes.
I've always professed that I love not taking my wallet anywhere, and I pick where I'm going to do business based on what's going to take my mobile payment options. Restaurants are always the unknown out there because restaurants were slow to transform everything like this. And as consumers are getting more and more used to dining out again, they're seeing that a lot of these organizations are now carrying, like they've done in Europe for years, carrying around the mobile devices that you can just tap your phone against, or on a lease case basis, taking a QR code and making it pay by QR code. So
Right.
what's happened is that's just in payments. Imagine how it is with everything else going on, and it's happened so quickly, but it has evolved in such a way that it's not disruptive. I mean, who would have thought that our parents would be using Zoom and FaceTime all the time? Well, that's all they had. And who
Right.
would have thought they'd be using Apple Pay and mobile payments and transform doing all their banking without going to an ATM, without going to a branch, without going through a drive-through. Everybody got used to it. And once they realized they could take a picture of a check and deposit it, and once it worked a couple times, they're going, why did I go to the branch to do this? This is the evolving that's going on. And as you said, the big tech firms and big tech solutions have really led the way.
100%, Jim. And you can extrapolate this in the future. Where will we be with crypto? Where will we be with NFTs?
Right.
Where will we be with the metaverse? I mean, it just never stops, right? So you're going to keep seeing the bar keep getting raised again, not necessarily by fintechs or FIs, but by, companies like Microsoft investing in a metaverse right now, going big. And you have to now look at that as what's that going to be, and what will financial services look like in the metaverse? And right now people are kind of going, it's a little weird. I don't quite get it. Well, I can remember back in the day when the internet came around and people went, what is the internet? And like, what would I do on it?
We thought it was just a faster dictionary.
Yes, exactly right. We did.
So
Yeah. So
we got
I
rid of our
definitely
World
remember
Book.
those
We
days.
got rid of our World Book encyclopedias and used Google, and we said, "Oh, it's just gonna be an
It's
information
just that.
highway."
Yeah.
In
Or it's
fact,
just
that's what they
email.
call it. They
Yeah.
call it the information highway.
That's
Little did they say it was
exactly
gonna be
right.
the payment highway, the transaction highway. Lee, any more?
That's right.
Yeah, so of course, Jim, this is a two-part question for you. Is there one area in particular where you think big tech impacts the digital banking landscape? And do today's financial institutions have the ability to compete?
I think the biggest impact and Allison, I'm going to refer to you on this as well. The biggest impact big tech has had on the financial services landscape is speed. The speed and efficiency of getting you from point A to point B in anything you do has made it so the patience of the consumer has been worn thin. Remember that if a consumer tries to open an account with you and you're all over the web saying, open an account digitally, but then you have to put together 7 different pieces of data. You have to give information that you don't have at your fingertips. You have to put in your driver's license number, and you go, I don't understand. And you realize that nothing's really changed. It's just been done. And in fact, the consumer may think, you just gotten lazy on me. You're making me do all the things you're doing, that I was doing in the past. And the reality is that's not digital. And I think the fintech firms and the big tech firms have really changed our perspective on what's possible. In addition, and it's more subtle, is the whole concept of risk avoidance versus risk management. Amazon and many other big retailers were willing to take returns and give you a new product before you return the old. And in fact, in many cases, they said, you know what, don't even return the other thing. Why would they do that? It hurt their finances because they knew the big picture was going to be bigger than that. I can't think of a financial institution that would say, don't worry about the fee. We're not going to charge you the fee. We'd like you as a customer. The reality is, this is the whole idea of using, the credit bureaus, things like this, alternative credit sources, to be able to look and say, how can I drive down in the universe to be able to serve more, but serve them faster and more efficiently? Allison, anything else? I don't know if I hit it all.
I think that's beautiful. And what I would add, if anything, to it is that these new fintechs and big techs are fundamentally disrupting the business model itself. They're not married to a business model. So they've come in and pulled back the curtain on what has historically been very opaque in financial services, whether it's overdraft fees, whether it's interchange fees. And what they've done is they found a way to arbitrage these traditional business models while at the same time reinventing the way that they engage with the consumer on the other side. So they actually, to your point around trust, become more of a trustworthy individual in the world and in the room, because the consumer goes, well, gosh, why wouldn't my FI have told me about that? I didn't realize that's how they made the money. And listen, I'm not making RFIs bad guys here. They're not, right? There's a very intricate business model behind the scenes to make sure that everything hangs together. But what really has disrupted, in addition to what you just said, is that they've disrupted that model itself because they're not married to it, and they can't, just like any new entrant can look at it with a blank slate and decide what it should be.
Also, they really fine-tuned the model of using data and insights as a value transfer for a better experience. In other words,
That's right.
I don't ever question how much Amazon knows about me.
That's right.
I question often what Facebook and Instagram know about me, because they come at me real quickly with ads when I've mentioned something. And I go, you know what, you haven't proven yourself yet, but Amazon has.
That's
As
right.
organizations realize that the way you're going to be able to get into deeper data is to provide exceptional experiences and empathy. In other
Yep.
words, doing things for my benefit. And when you're talking about speed, look at buy now, pay later. We used to use PPP loans as being the speed demon. Guys, buy now, pay later came on about 8 months ago, 9 months ago, and it's disrupted what I'll call some of the biggest payment fintechs like PayPal. They've had to catch up with the Klarnas and others. So, everything's in continuous motion, as you said at the beginning, Allison.
Yeah. You can imagine what BNPL might do to credit card interchange in the next 5 years.
Yeah.
Something to think about.
All right, you two have such great conversation. We'll try to get to 2 more questions, depending on how long this one. No, it's
That was
great.
a warning there.
Allison, you work for a provider who helps these institutions stay ahead. What do you think is the most crucial for a company like Alkami as we continue to watch the impact of big tech in digital banking?
I think the most crucial thing for Alkami is to never stop listening and never stop learning, right? Be a learn-it-all, not a know-it-all. So how do we invest the time and invest the research and invest the discipline of never resting on laurels and always making sure that we are learning about the space in which we love to, eventually be the master of, but how do you both be master and student at the same time? So I think it's really important that we continue to get feedback from a rich ecosystem of partners and from clients and from prospects and from end users, and benchmarking against these tech companies, regardless of category, to ensure that we never set our eyes in the rear view mirror, but that we're always looking forward into what's ahead of us and around the corner to anticipate where the next trend is going to go.
That goes with the financial institutions as well. Complacency is the antidote of being a challenger mindset. You just have to continually look ahead, because people are saying, geez, I'm almost done with digital transformation. No, yeah, that digital transformation is a process, never going to go away.
Exactly.
One more, Jim. In the Alkami research report, 53% of respondents noted that they thought the bank of the future would be a technology company. What are your thoughts? Agree or disagree?
They got to be a financial institution first. We like to say we need to be a tech company. You need to use tech, but unless the legacy mindsets at the top of an organization truly embrace digital banking, technology is not going to make any difference. Allison?
Agreed. Technology, we always say, is an enabler to the outcome, right? And it has to be an accelerant to the change that you're looking to see, not an inhibitor. But at the end of the day, it's about what is your business purpose, your mission, what are your values? And technology now needs to be an accelerant to those things, not the thing you rely on as a substitute for those things.
By the way, being a tech company is a great thing to say your investor conferences, but the reality is we could, in fact, people have recently blown holes in that, that you say you want to be a tech company, not a financial company. No, you got to be a financial company doing it faster, better, easier.
Great. Now, before I close this out, just going to bring it back to you guys to see if you have any final words for everyone that's joined us.
Allison?
No, I just want to thank you, Jim, and the team for giving us the opportunity. Thank you to the audience who listened in. We look forward to sending you the information. And if you have questions or comments, we're all ears, because we are a continuous work in progress here at Alkami. So we appreciate the dialogue.
And the only thing I can say is continue to learn. Allison just said it a minute ago, is when you stop learning, all progress stops. You're done. So.
Great. Thank you, Allison. Thank you, Jim, and of course, Alkami, for today's awesome webinar. To our listeners, you will receive an on-demand link to the webinar shortly, so you can share that with your teams. Thanks for joining us and have a wonderful afternoon.
Thank you. Thanks, Jim.